Welcome back. You're still watching Closing Trades right here on ET Now. Quickly get your global perspective as well. We have Bundeep Singh Rangar, who's the chairman of IndusView, joining us from London with a quick take on what is expected later today. Bundeep, thanks very much for taking out the time. There's a big sell-off, as we can see in the markets. How are you reading the situation ahead of what may happen overnight in New York?
Well, I guess the critical question is what sort of expectations are we gauging ourselves against, right? Because we all know that, last year this time we had the announcement of QE2, and with that quantitative easing program, you had a ripple effect in the world economy. It certainly helped in the U.S., and it's maybe staved off some of the recessionary movements that were there, and that, of course, took an about turn with the debt crisis and the whole debate in Washington about servicing that, and of course the S&P downgrade. We're now at a slightly different juncture, and it's really questionable whether Bernanke will go for a quantitative easing program, or maybe focus on something that's more operational, and in some ways not giving a blanket asset purchase like he did last time, and focusing on maybe buying longer dated treasury bonds and keeping relative rates flat, and kind of forcing investors to move into higher risk for yield and growth.
Do you think the market is factoring in that, the fact that there may not be really a QE3 announcement or anything to the nature, and so the sell-off is happening across the board?
I suspect that because, that's one of the last few tools in the arsenal. They've already announced that interest rates will not move until 2013. And if they now go for a QE2 program, that leaves very little room for them to do anything should things go worse in the future. And the suspicion is that it won't go for a large, like the last time, a $600 billion style government asset purchase program. That's not what we'll see most likely this time.
Bundeep, what happens next then, assuming that the scenario shapes up as we are talking about right now? There was talk of if indeed these announcements come in, then the commodity pack might actually start to show a bit of a rally, which probably won't happen as well. What happens to the equity markets then?
In some ways, it's a different situation from the last time, and the outlook isn't that great. I think the last time you had a general saving grace from the Asian economies that were growing, and the equity markets in some ways were looking at China's growth and India's growth to take the world out of a recession. This time it's a different situation. Yes, commodity prices are lower, but given what happened the last time and the resulting flows of capital into emerging markets, because that's where you got better yields given the depressing of U.S. Treasury yields with the QE2 program, the emerging markets central banks had to basically combat the effect of that strong inflow of capital, which led to asset inflation, currency appreciation, and therefore the capital controls came in, and the tightening of monetary policy now in these emerging markets, China and India being key ones, largely to combat inflation, means that growth is now not at the same rate as before, and there's really a danger of much more of a worldwide slowdown, and certainly that'll impact global equity markets, and you're already seeing that.
All right, Bundeep, leave it at that. Thanks so much for joining in today and giving us that bit of perspective. Infosys has come off from the levels that it was holding up, so it's now just about holding out in the green, 2188 for Infosys. So yes, there is weakness all around, and on the Nifty, 3 stocks in the green. Hero MotoCorp, the only one which is truly and definitely in the green. This one has cracked quite a bit as well. Anant, is it that time wherein you